Hi, it's Andrew with the Market Mindset. Today, big news in the mining space. Copper is really getting a lot of attention as the chart is looking great. The commodity's back in talks. We see out of China. We also see big funds really starting to pay attention, not only in gold, but in copper as well, because finally people are coming to terms with the entire ESG story, the entire energy transition, and the big players are starting to, kind of formulate their strategy for how they're going to proceed. And that's great news for eventually for juniors. It trickles down, but great news for Peru, great news for Forte Minerals. So we wanted to catch up with Patrick Elliott from Forte Minerals, who's had a strong year, a strong showing at PDAC, and talk to him just about the gold market, the copper market, and Peru, and get people familiar as to what the opportunity is out there. So Patrick, great to see you. And how was PDAC first?
Phenomenal. Thanks for having us. It was a great show. Our timing with what we're doing and the market right now is coming to fruition. We've been forecasting it for a while, but this is 15 years of work in the copper and gold space in Peru. So things are looking very positive in the sector, and we're starting to see some really key indicators. And obviously, price of gold and copper is paramount, but other critical indicators that we'll speak about today, and excited to be on the show.
As an investor myself, and hearing people that are subscribers, and even at VRIC, and people are like, oh my God, other than uranium, I've kind of taken a lot of abuse. And meanwhile, hearing a message like AI is up a couple 100%, they think, wait, this is a bull market, what's going on? People are wondering what's going to make the mining sector move, because the big macro stories people kind of understand, but they're like, what are we waiting on? What's happening? So maybe you can walk us through, for someone who's been in the market for a long time, what are some of these indicators that you've seen that you feel like, yes, like we've hit a bottom, things are starting to percolate?
Well, we've seen a lot transpire over the last few years. It's been on the metals market, very, very slow, and it's been kind of one-off, depending if it's lithium, cobalt, uranium. We're bullish on copper. We always have been. It's a fundamental, critical element that we've been long aware that we're going to be in deficit in the future. And so this is why we start years and years ago looking forward, making the discoveries, assembling these projects, making the acquisitions, because if you're going to do them in a bull market, you're going to be paying 10 to 100 times the price for these projects. So fueling the exploration side when the market's slow or when we're in a bear market is critical. Doing the scientific work and the work on the ground, and advancing them through a bull market has been our model. And we've all looked at this copper crunch. You've heard it from all the analysts and the Lucas Lundins and the Ross Beatties and the Rick Rules and the Brian Londons of the world for a while. And we're starting to see some real excitement in copper price and gold price, and it's because of what's to come. It's getting ready for what's going to be a really exciting bull market.
And we're seeing some of these funds, like today out of London, funds now generating specifically mineral-based. Even out of just kind of hearsay, I'm hearing people putting funds together that are solely based on commodities, which is also a great sign, because those are generally the people that kind of follow that Warren Buffett rule of where they look for deep value that's unloved in an uncared for sector that as time is forgotten, but that is still critical.
Right.
And in normal terms, people go, "Oh, that's obvious. I'd invest in that." Well, there's nothing that screams more that exact formula than mining right now.
The inflow of capitals into funds, we're starting to see that, specifically natural resource funds. We haven't seen that in the last few years, so that's a key indicator that we often see. So you got the institutions coming in, but for the last couple of years, we've had the major company interests. They've recognized that the pipeline, the exploration assets that they have that are moving forward to development and production are not there. They don't have enough to come on stream for some of their production maybe coming off stream, and so that's been recognized. So you're seeing big budgets from the majors, big exploration budgets, and that'll get put into some of their exploration projects, but also into investments in equity and other junior companies to have interest in their projects. And that's the dominant source of funding we've seen in the last while. Now we're going to start seeing the institutions come in. And then eventually the retail market. But the smart guys are already there. Like often before things get really exciting, the smartest guys in the business are buying the stock. They're getting positioned and building their portfolios. And what I always say to people and to investors that like this space is invest in a portfolio of a company that has a portfolio of projects, not just in one project, because there's so many risks associated that could derail, even a good project, whether it's an environmental or permitting or a political situation. But those companies out there that have a portfolio and have the exceptional teams that have had success in the past, right? You want to bet on it's not indifferent to having good athletes, right? You don't want to bet on an athlete that's done it once, but it's done it many times in their career. So,
and it sounds easy, like the formula when people say bet on the people, the projects, and the money behind it, and you go, oh, well, that's easy. That's a simple formula. But the issue now is that what that really means is someone who's thinking so far ahead that one normally wouldn't think you'd have to. So, for instance, with your ESG strategy in Peru, is normally people would say, you just have to work on putting money in the ground and finding something. End of story. Say, no. Those days are long gone. You have to almost assume you're going to have a resource, you're going to have a big win, and then what is all these other things that 15 years down the road might be a problem, and let's deal with them, front end them, and make sure so in case we're engaged with the community, whatever plants, really roads, or what, those are things you have to already start thinking about well before the big discovery could be made.
Right, and when you're talking about copper explorers, copper producers, we're talking about some of the largest mines on the planet. Apart from iron ore, which could have bigger tonnage and be larger, longer mine life, porphyry coppers account for probably 60% of those. And they take a long time to get on stream, to get permitted, to get put into production. So if we can mitigate that time horizon from initial discovery or targeting of alteration anomaly to production by engaging, initiating, and developing a robust ESG program that deals with, not just the communities, but all the environmental factors, the thinking ahead on development and the political relationships as well, then we can help create efficiencies in getting into production. And so that has become more prevalent in modern days. And 20 years ago, you wouldn't have started that process from the exploration phase. It would have been further down feasibility studies or pre-feas.
And it makes a significant difference because even in somewhere like Peru, where I think it's only 1% of the land has really been searched for. I mean, it's such a rich, abundant area with a huge future prospects, is that you don't want to have social unrest with disparities in income that you might see at a Panama or another Latin American country, where at any stage they feel left out. That it just takes that a bit of a roadblock of this, which causes political turmoil. Is that if right off the bat you're engaging with them and they feel like they're being heard and they're part of the process, that can mitigate so much of the downstream issues that percolate from time to time.
Absolutely. And, operating in areas that have a mining history, that have through the years, there's going to be roadblocks and political changes and whatnot, but if you look at the history and you have the success in that country and it remains mining friendly, then it's usually a pretty good place to operate. So when you add the metal endowments that you see in the Andes region of South America, it's very evident that there's a lot that remains to be explored and to discover. I
think it was Canada put in about $5.2 billion in capital into Peru. It was 2022, so there's a lot of money there, and the relationship between Canada and Peru is great. But also, almost equally valuable is that they have in place like a social as well as mining-friendly framework to work from. That's helps to guide people the whole process. And that's something, once again, that ties into the ESG, that if you engage in early, is certainly going to make not only you attractive to that environment to work in, but a major, if one has a discovery and things work out, they're going to look and position a company that has done the social and environmental part, done as take that equation with the endowment. That will become very critical to see, can we take this mine to life?
No, that de-risks a lot of different checklists for the majors when you get to that point. And that is our model, as well as a lot of other junior companies, where we discover, acquire, stake projects, build up the resources, and in hopes to sell to a major. So if you have the environmental and the permitting and the geological risk squared up, then it certainly makes a decision easier.
And of course, having the portfolio, like anything, having your own personal portfolio, you are able to mitigate risk and spread out risk. You guys have a portfolio, but you also work for a larger, or part of a larger group of Globetrotters, where there's a stream of projects, but it's not all the time that you get like a significant, incredible copper, but then you add in a gold one as well. Right. So you're getting that too right now. Usually it's like we've got a favorite, then we've got a backup. You've got two kind of favorites, I guess you're probably going to be fighting over right now to see who gets more love.
The end equation is finding something big, right? We look for big alteration anomalies, whether it's a high sulfidation gold system that could be multi-million ounces, or big porphyry copper. And generally porphyry coppers are going to have a sizable footprint and tonnage, and it's finding that good grade. And what we've seen in Peru, it's a clean metallurgy there. There's not a whole lot of arsenic associated with that you see associated with a lot of these porphyries in Argentina, and that's why the copper producers love Peru and Chile. Is that the metallurgy is fairly simple, and it's consistent grades, and they want the large tonnage for those extremely large mine lives. We're talking, $3 to $7 billion sometimes to put these into production for these big porphyry coppers. So that's not going to happen at a junior company level or a mid-tier. So it's the majors that you're targeting, and they have to have that threshold on grade and tonnage, and these other ESG checklists, some of those in place that makes it a go, makes it a easy decision for them. And that's what we're looking for. And that's what we found. We've made a few discoveries in the country. We've identified some incredible alteration anomalies that haven't been drilled yet, and they have a good chance of discovery as well. The drill permits are in place for two of those projects. So it's a good position to be in at a right time in the market. We've been waiting for this for a while, but it's taken many years to get here, building these assets, building the team, but persevering through the tough times, making cheap acquisitions, and maintaining the handle on drill permitting. It takes a couple of years.
Yes. And you made an interesting point earlier when we were speaking about, like, really as far as a macro overseeing, layer from, the climate change perspective. 10 years ago, this process really should have been fired up. We should have been out to replace lost copper, whether it's graphite, lithium. That ball should have been rolling, and it's not a blame game. I don't think people really understood the length of time from discovery to a mine. They probably thought, it's probably a year, 6 months. We'll bring on whatever discovery, or BHP can bring out a project, no problem. Is that needs to narrow down at a rapid pace. But luckily, someone like yourself, you did see that we should be doing this now 10 years ago. You were able to get some assets on the cheap, but then hold on to them. Because sometimes holding on to them, people lose great assets, and people wonder sometimes, well, how come that asset hasn't been developed? They lost it. And that happens over time. When
times are tough, it's certainly it is tough to hold on to large portfolios. They cost a lot of money to keep. So that's when opportunities come alive. If you're versatile and flexible, would be able to pick them up. We see it in all the downturns of the cycle. When times are tough and we're in a bare metals cycle, the companies focus on optimizing production, right? Exploration assets get relinquished and exploration budgets get cut. And it's just a function of the market where you're not going to see enough money put into exploration. So that creates opportunity, as we talked about, for consolidation, for acquisition, at the right prices, and slowly building up that portfolio, and to when the market does improve, and you can get the financing in place to permit and drill these projects. So that's really where we're at now. There's some exciting key indicators happening in the gold copper space out there, as well as silver. There's a lot of macroeconomic fundamentals that we're starting to see, we talked about for the last couple of years, that will transpire, and it's only going to get better.
It's funny because there's always that typical fight between gold and crypto kind of stealing some of the thunder that should be focused on mining, and that's probably a decent argument. But I always make it very simple. I say, yes, crypto is getting a lot of attention, but there's a reason why federal governments and governments as a whole have been buying gold. And really, I don't look at the marketing side so much. It's interesting, the narrative. It's like, well, who's buying? And if it's like large countries are buying gold, that tells me more than, oh, they're all buying a cryptocurrency, which they're not.
Yeah, we're seeing more countries use gold as a safe haven until they can get some more confidence in their currencies, and that will continue to strengthen. And we're in for a really good gold market, and but a very long-term copper market, and that's what we've been sizing up for. And a lot of companies you see are have also been doing the same thing. But it's a critical metal. It's probably the most important metal involved in this energy transition phase, and there's a lot of big forecasts for 2030, but no way we're ever going to meet them with the current supply and production of copper.
That's what the easiest thing to look at is the supply demand of something that is critical in all aspects of infrastructure. So even if you took out the energy transition and just the infrastructure that China wants to build, or the making America great again, whatever it is that you're wanting to do, that takes a lot of infrastructure and it's a lot of metal.
Right.
But you throw in there the urgency of an energy transition, then it's hyper escalated. But what's interesting too is I think what might start shedding a light not only to the bigger funds and the family offices is even Larry Fink at BlackRock talked about the tokenization of commodities too, because all of a sudden it becomes more of a tech discussion. Like, yes, we're going to tokenize copper so that there's a digital contract that we can trade a lot easier. And that would start to redefine and reshape the world a bit, but it also brings to highlight how critical how that works. A blockchain can work in a positive way, but how we can tokenize and really track whether or not the copper is coming from an ESG-friendly place or one that's not so great. And I think that, as dystopian as it might sound, I think that's going to be a factor when people start buying in the future as well.
Yeah, not to discount, the energy transition as well. Uranium, we've seen a lot of eyes on uranium. It's going to be important as, we move forward in requiring more energy. You talk about, the blockchain and the Bitcoin, it requires tremendous amount of energy. And, there is wind and solar that can handle a portion of that, but it can't handle the load on its own. So oil and gas, you'll see that be dominant and strengthen, and also uranium. So uranium, oil and gas, and a portion of that kind of wind and solar to offset on the sustainability. That's important. But as we enter into a long-term bull market, you're going to see a lot of the metals. We're all going to move together in it, but it's sticking to what you're comfortable with, what's going to be most in demand and highest in deficit. That's going to drive the price, and that's where we like to be positioned.
And I mean, I like to make this kind of discussion hone in on a retail investor, is that one of the great things about a junior miner who's in your situation is no one ever just goes all in on a stock. That's silly. And as being a broker in the past, no one had ever encouraged that. This is a step that you can start getting into a stock very cheaply, to say the least, and watch them over time as they grow, as you're hitting milestones. And if you're doing as management that you said you're going to do, you can add into a position. And that's what I like about the mining, is that it's a bit longer rather than someone saying, I'm going to trade this because the volatility is high and it's AI and it's NVIDIA. I mean, that's a different trade rather than I'm investing in an entire macro in which I know that we need these things, and I can get in on a company that's, talking the talk at this stage to get an asymmetric gain, hopefully. But at any point, I can pull out of it easily, or if they're not doing what they said they're going to do. But I think for people, that is such a great entry point because there's not a huge amount of risk. They could throw $1,000 or $1,500 at a stock and wait and try to see, okay, yeah, they're doing the right thing, and add to it. And that, I think, is critical to remind people that you can be part of this transition and also be part of the growth and the story, but also make some money.
Right. No, that's a good point. And a lot of the retail investors, they don't have the patience to have these very long-term holds on their investments. And, if, for example, you look at Rick Rule, his average hold on stocks is about 6 years. And through that period, 6 years, you could have, losses, 50%, 80% losses in the share price. And what you got to do at that point is reevaluate why you're in that stock and why you believe in the sector and what are the long-term benefits and economic factors that you see in the sector. And it might even create an opportunity to re-enter the stock at a cheaper price. And we experienced that over the last few years and whatnot, and you see a big suppression in share prices in the junior sector still, and that'll improve, and we're going to see a lot of interest come back into the sector, and it'll work its way down into the retail, but it's still not quite there. We talked about the majors injection of capital into the junior sector. At the project level, at the company level, and in their own exploration budgets. And then we talked about the institutions' inflow of capital into some funds, specifically natural resource funds, and eventually that'll get to the retail. But the smart guys are buying now and positioning themselves now for probably more long-term holds. We're starting to see that change. And copper, the last couple of weeks, has performed really well, and it's not, it's not over yet.
No, and I like that the framework of, we always say we're long-term holders of businesses. That's what we're looking for, someone who could get the job done. And if the stock comes down, and we've had people ask, like, well, why do you still hold that? Why do you have it? I'm like, well, do you know something I don't? The management did what they said they're going to do. They've got good results. Just because the market's down, that doesn't necessarily mean anything.
Creates a good opportunity. Yeah.
And if you haven't been maybe catching up, and you look and you're surprised by, oh my God, I'm down on this one. It's a good time to look at it and go, well, has something dramatically changed? And if it hasn't, then it's a good reminder to go, oh, I own this because of this, this, and this. That's, as a Warren Buffett would say, that's a buying opportunity. But it is, sometimes we just need that reminder of, wait, why did I get this one? And being reaffirmed by it, or look to see they veered off somewhere else I don't want to go and sell. But it's easy to have that conversation. That's why we're here as well, is to remind people that they've got jobs and lives and focus on other things, is to go, you're in this because here's the macro, here's what management has done. Whether the price is here or there, we're in it for 5 years. So if it's down here, up here, it's not really relevant for right today.
No, that's there's two big pieces to that. It's the market riding the strengthening metals prices and the market, and then the believing in a team that has a good model that has a chance of, or you believe that has a chance of making a discovery and building these assets. I mean, these assets are very hard to find, and but when they're found and you develop big resources, you're rewarded immensely, and that's why people love this business, and we get so excited about the start of these bulls, is that we know what's forthcoming. And if you already have had the 10 or 15 years of work done assembling these projects, getting these assets, and you have these assets in place to now go do further work and build the resources, then you're at the forefront of where you need to be as this bull unfolds.
So as far as Forte, what are some things that someone in the near term should be paying attention to, news coming out, work being done, just so they can kind of keep a checklist as well?
Yeah, so let's rewind, go back to 2 years when we first IPO'd. We had 3 projects in Peru, 2 porphyry coppers and 1 gold with no permits. We had no permits to go in and drill and do any further work. We could do surface work and whatnot. This fall, we received 2 drilling permits, DIA drill permits, one for the porphyry copper and one for our gold that have never been drilled. So now we have 2 permits. We should see some drilling sometime mid this year on at least one of them. Looking like we might drill the gold one first, but that could change. And we might drill the copper. But no, we're ready to drill both of those. And then the recent acquisition of this other gold asset is truly a testament to the team's perseverance over 10 years to try and acquire a phenomenal asset that was historically discovered by Buenaventura. You've seen the press release. If not, go check it out. It's called Altaruri. We will be working on the permitting, social engagement, and the ESG portions of that in order to attain a drill permit for that project while we raise some capital and go drill these other ones. So a lot of work and a lot of excitement this year, and I think the market should perform well with it. The timing's really good to be going in and drilling these projects and adding some resources.
Excellent. Well, thanks so much, Patrick, for coming on. It's great to have in the boots ground as well advice that things are turning around, to see those indicators, because sometimes people need a little bit of glimmer of hope, and they look out there and they think, oh my God, my portfolio. So to have someone come and with the experience you've had in the markets to remind them that no, hold on, like just hang in there.
Well, we've been hearing it for a while from some of the smartest guys in the business, whether they're on the investment side, the analytical side, or the company building side. And now it's starting to come to fruition, and we're seeing these key indicators really drive things. So thanks a lot for having me. It's always a pleasure to have these discussions with you, and look for more exciting times ahead.
Excellent. Well, thanks so much, Patrick, and enjoy the rest of the day.
Thank you.